Welcome back, art lovers and investors. If you've been following along in this series, you've already gained a deep understanding of how the art market works and the key players that shape it. In today's video, we're diving into Chapter 6, Art as an Investment Asset. In this chapter, we'll explore how art can function not just as a beautiful object for personal enjoyment, but as a powerful investment asset that can appreciate over time. Art has traditionally been seen as a store of value, and in recent years, it's become an increasingly popular alternative to traditional investments like stocks, bonds, and real estate. We'll break down the historical performance of art as an asset, looking at how it has fared during different economic cycles. We'll also touch on the risks and rewards of investing in art, and why it's often considered a high-risk, high-reward investment. But it's not all about making money. We'll also discuss how art can provide diversification in your portfolio, and why having a tangible asset like art can be a hedge against economic uncertainty. If you've ever wondered whether art is a worthwhile investment, or if you're already considering adding art to your portfolio, this video is for you. Let's dive in and explore how art can be both an emotional and financial asset. The historical performance of art as an investment. Let's start by looking at the historical performance of art as an investment. Historically, art has been viewed as a form of wealth preservation, especially in times of economic uncertainty. Unlike traditional investments like stocks or bonds, art doesn't offer regular income or dividends, but has proven to be a long-term store of value. Over the years, the value of fine art has outpaced inflation, making it an attractive option for investors looking to preserve and grow their wealth. For example, the Art Price Global Index, which tracks the performance of the global art market, has shown that art prices have consistently increased over the past few decades. In fact, the art market has seen some incredible growth, especially in the contemporary and modern art sectors. If we look at the performance of art during different economic cycles, we can see that art tends to be a resilient asset. During economic downturns like the 2008 financial crisis, the art market did experience a slowdown, but it was far less volatile compared to traditional financial markets. While stock markets plunged and real estate markets took a hit, art prices generally recovered faster and high-quality works continued to appreciate in value. The luxury market, which includes high-end art, has also been less affected by market volatility. The million-dollar auction sales have become more common, and works by renowned artists have consistently set new records. Art has become an important alternative investment for wealthy individuals and institutions looking to diversify their portfolios. That said, art is still a highly illiquid asset. Unlike stocks, which can be sold at any moment, selling art can take time, especially for niche or less established works. However, for those with patience and the right market knowledge, art can provide significant returns over the long term. Risks and rewards of investing in art. Of course, with any investment, there are both risks and rewards. When it comes to art, these are particularly important to understand. Let's first talk about the rewards. The reasons why art has become such a sought-after asset. The biggest reward of investing in art is the potential for long-term appreciation. Over time, art can significantly increase in value, especially when it comes from well-known artists or movements. The works of iconic artists like Picasso, Van Gogh, and Klimt have seen their prices soar in recent years, and even emerging artists can see their works appreciate, provided they gain recognition and demand grows. Another reward is the aesthetic enjoyment that comes with owning art. While you may be primarily interested in art as an investment, owning beautiful works can bring personal joy and fulfillment, which is a unique aspect of art compared to traditional investments. However, the risks involved in investing in art are substantial. First, as mentioned earlier, art is illiquid. If you need to sell your art quickly, you may not get the price you expect, and it could take months, or even years, to find a buyer willing to pay your asking price. Secondly, art is subject to market fluctuations. The art market can be unpredictable, influenced by trends, economic conditions, and changing tastes. A painting that is highly sought after today could lose its appeal tomorrow, leading to a potential drop in value. Just because an artist is hot now doesn't guarantee their work will remain valuable in the future. Another risk comes from the lack of transparency in art pricing. Unlike stocks or real estate, where pricing is relatively standardized, art pricing can be highly subjective. The price of a piece can be influenced by the reputation of the artist, the rarity of the work, and even the emotional response it evokes from buyers. As a result, it can be difficult to assess whether you're paying a fair price for a piece. Finally, there's the risk of forgery and provenance issues. Without proper verification, you could end up purchasing a fake, which could have a devastating effect on your investment. Diversification and art as a hedge against economic uncertainty. One of the key advantages of art as an investment is its ability to diversify your portfolio. As a tangible asset, art behaves differently from traditional financial investments like stocks, bonds, or real estate. This makes it a valuable tool for reducing risk and adding balance to an investment portfolio. Art has a low correlation with other asset classes, meaning that its value doesn't always move in sync with the stock market or real estate market. When financial markets experience volatility, art often remains stable or even appreciates in value, especially for blue-chip pieces or works by established artists. As a result, adding art to your investment portfolio can help reduce overall risk and provide some stability during times of economic uncertainty. For example, during the global financial crisis of 2008, many traditional assets lost significant value, but art prices held steady. Investors with a diverse portfolio that included art were better positioned to weather the storm and saw fewer fluctuations in the value of their holdings. In addition to diversification, art also serves as a hedge against inflation. When the value of currency declines due to inflation, the value of tangible assets like art tends to rise. This is why high-end art is often viewed as a safe haven during periods of economic instability. As the dollar weakens, for instance, foreign investors may look to art as a way to protect their wealth. Owning art can also offer a sense of security. Unlike stocks, which can fluctuate wildly, or real estate, which can be impacted by changes in the housing market, art remains a more stable and lasting asset. It's physical, it's cultural, and it's not subject to the whims of the financial markets in the same way other investments are. Key factors for success in art investment. To succeed in art investment, you need to approach it strategically. While art can be a highly rewarding investment, it's not without its challenges. So, what are the key factors that contribute to success in the art market? First, understanding market trends is crucial. The art market is constantly evolving, and knowing what's in demand can help you make smart purchasing decisions. Keeping an eye on auction results, gallery exhibitions, and rising artists will give you insight into which types of art are likely to appreciate in value. Second, you need to focus on provenance and authenticity. A piece with a well-documented history and a verified signature is far more likely to appreciate than one without. This is why working with reputable galleries, auction houses, and art dealers is essential to avoid forgeries or buying stolen art. Make sure to research the artist, understand their significance in the market, and confirm the provenance of the work. Another important factor is diversification. As we discussed earlier, art should be a part of a well-rounded investment portfolio. Don't put all your money into one artist or style of art. A diversified collection that spans different artists, periods, and media will increase your chances of seeing long-term gains. Lastly, patience is key in art investment. Unlike the fast-moving world of stocks, the art market moves at a slower pace. High-quality pieces often take years to appreciate, so you need to have a long-term investment horizon and be willing to hold onto your pieces through market fluctuations. In summary, successful art investment requires knowledge, research, and a strategic approach. Understand the market trends, verify the authenticity of your pieces, diversify your collection, and be patient as your investments grow. While art might not provide quick returns like some other asset classes, it offers unique opportunities for long-term capital appreciation. Patience is perhaps the most important element of all. Art isn't a get-rich-quick scheme. The value of a piece can take years, or even decades, to fully materialize. However, by keeping your investments steady and focused on long-term gains, you'll find that art can be an incredibly rewarding asset to hold. Investing in art is not just about the monetary value, but also about cultural engagement. Art enriches the world around us, and investing in it is a way of preserving and supporting creativity for future generations. As you build your collection, you contribute to the ongoing legacy of the artists you invest in. The road ahead for art investors. As we conclude Chapter 6, it's clear that art as an investment asset is a multifaceted opportunity. It's not just about the art itself, but the broader market forces, the emotional engagement it sparks, and the careful strategies you employ to make it a rewarding part of your portfolio. By focusing on historical performance, managing the risks and rewards, and adopting a long-term investment mindset, art can stand as a reliable asset class within a well-diversified portfolio. The art market continues to evolve, with new trends emerging, like the increasing role of digital art and NFTs, and growing interest from younger investors. As technology continues to shape the way art is created, bought, and sold, it's crucial for investors to stay informed and adaptable. Finally, as with any investment, your journey in the art market will require research, due diligence, and an eye for quality. Whether you're a seasoned collector or a first-time buyer, the road ahead promises many opportunities, as long as you're willing to put in the work and take calculated risks. If you found this video insightful, don't forget to like, subscribe, and share it with others interested in art investment. And as always, drop your questions and thoughts in the comments below. We'd love to hear about your experiences and what you're investing in next. Thanks for tuning in, and we'll see you in the next one.